Are you looking for a way to invest 10 million naira in Nigeria? So in this video, I want to show you how to invest 10 million naira in Nigeria and get good returns. Now, this particular video is designed to show you my own way, like my best mix. If you think that you don't want to be too aggressive in your investments. You want to preserve capital as well as grow your return steadily above inflation. So I want to show you the exact strategy to preserve and grow your 10 million by an average of 50% per annum. Yes, and then turn into 75 to 100 in 5 to 10 years. So watch the strategy and watch the model. So it's going to be a mix of low risk and high risk return. But then if you mix the two together, you have what we call like a balanced portfolio that will most likely outperform inflation. That's key for me. Outperform inflation. And remember, the target is to deliver an average of 50% per annum, meaning if you can compound 50% per annum for the next 5 years, you should have close to 75 or more in your portfolio. So that's exactly what I want to show you. So let's look at the disclaimer. So the ideas shared in this video are based on my personal research and calculations. Kindly do your due diligence before you invest in the company stocks or whatever investment I'm going to talk about. Now, remember, the stock market comes with a lot of risk due to uncertainty. So please vet my recommendation based on your risk profile. This last part is very, very important. You need to look at your risk profile and then make sure that whatever I share matches your risk profile. Now, you might want to ask, why 10 million naira? Why not five? Why not two? Why not three? Blah, blah, blah. Now, the reason I used 10 million is because one of the low risk investments I'll be recommending requires a minimum of 5 million for you to get started. So that's why I probably think 10 million is fair. So it's not like I'm saying, oh, you must have 10, but because the minimum required to get started in one of the investment I'll be talking about, where you'll be preserving your capital, is actually 5 million naira. Now, the remaining 5 million is where you can now push up, meaning that if you have 15, you have 20, you have 30, you have 40, then that works. So for me, I think this model works if you have a minimum of 10 million. But if you have a minimum of 5 million, let's say what you have is 5 million naira, then it means you will not be able to invest in that first recommendation, which I'm going to share right now. So that is just why I think 10 million is fair and it's better for me to start with. So first one is commercial paper. Now, if you're familiar with commercial paper, you know that commercial paper requires a minimum of 5 million naira. So that's why I actually pegged it at 10 million. Assuming commercial paper requires maybe like 1 million, 2 million, you probably would have seen that investment a lot lower. So I am choosing 10 million because of commercial paper. What is commercial paper? Commercial paper is a short-term, unsecured debt instrument of a company. So what they do with commercial paper is to use it to raise funds to finance short-term liability. So in summary, CP is a short-term unsecured debt instrument companies use to raise money to finance short-term liabilities and execute growth projects. So you need to look at it, that CP, when companies need money to execute growth-related projects or maybe finance working capital. So that's exactly what it means. Now, for instance, let's say you run a company and you looked at your book and realized that a significant part of your profits or your cash is tied to your receivables, or maybe you feel that, okay, your upcoming debts, maybe those current liabilities are huge, that you might probably just want to raise some cash to quickly finance them. So that's exactly what TPE. So they are usually issued by companies and they are short term. Note this, they are short term, meaning that they expire in less than 12 months. Most times, like Nigeria here, you see maximum of 270 days, ranges from 30 to 270 days. Now, it is regulated by the FMDQ. FMDQ is Financial Market Dealers Quotation. Now, CP maturity ranges from 30 to 70 days. That's why it's tagged short-term debt instruments, short-term debt instruments. Now, just like you have your commercial, your treasury bill, which expires in less than a year, 364 days. Some will target 365 days. So CP most of the times is 270 days. Like we just rounded up Access Bank commercial paper, and then the maturity, the longest tenor is 270 days. So I think between 90 to 270 days. So the minimum investment capital in CP is 5 million naira. So did you see why I chose 10 million as the amount to invest? So if you have less than 10, it still doesn't mean you cannot invest. Sure, you can do CP of 5 million, or you might as well try the second option that I'll be sharing with you. But for me, I think 10 million is fair because you'll be able to build a balanced portfolio, and you also be able to preserve part of your capital while growing the other on an annual basis. And then if you follow the steps I'm about to share, most likely you will do 50% comfortably in the stock market. This is not something that I'm predicting. This is something that I have tried and I've seen the way it works. So I have a plan like this, and I'm probably in my second or third year. So, and I decided to share this, thinking other might want to adopt the same model. So let's look at some of CPs issued by high-rated companies in Nigeria. So for some of us that are wondering what CP is. And then after this video, you should be able to identify CP when you see them. Now you hear something like MTN. These are past CPs issued in Nigeria, probably from 2023 into 2024. Now you see MTN Nigeria 50 billion series 1 and 2 commercial papers. Now this comes in when MTN is in need for funds. MTN wants to fund some projects. You know, MTN has been battling FX crisis and is looking for ways to reduce FX exposure, and it's been telling on its financial. So the only way they could sustain their growth or sustain financing of working capital basically is to issue commercial paper. So that is MTN for you. And then if you look at the returns, so let's see if we can find that MTN commercial paper. So let's see if we can find the details right here. So this is MTN commercial paper. So let me look for one that's easier to access. Okay, let's look at share here. So you see MTN completes 75 completes on 5.1 billion commercial paper issuance. So right here, you will see details. The 181 and 265-day CP were issued at yield. You can see, look at the yield, 27.5%. This was 2024, last year. So yield was as high as 27.5%. And then the 265 days was as high as 29%, respectively, with an issue date of Thursday, November 7th. So the 265 days CP was priced at par with the 365 day treasury bill instrument, which closed at a yield of 29%. So you can see that it was the interest or the yield was quite high, was very, very high. The yield on CP is the return and what you paid, the return, which is your interest return, divided by the actual amount you paid, which is the discounted value of that CP. You know, sometimes when you look at CP, you will see the yield on that CP and discounted value of that CP. Discounted value of that CP is what you actually paid compared to the face value. So you can, let's say I invested 10 million naira on a CP. Now, at the end of the day, and it has a discount of an average of like, let's say 15% or thereabout. So it means that my actual investment on that CP will be around 8.5. 8.5 plus or minus because they are selling to me at a discount. So meaning they are only taking the discounted parts of that CP, and then the other one is by interest. Now on maturity, I'm going to receive my face value. So the actual yield on that CP is 1.5 divided by 8.5. So I'm not taking into account tax. I know there will be tax and all. Just to give you an idea of what your yield on CP is. So here we have more CP, we have Sujimoto 20 billion commercial paper, we have the Agro Ecno 5 billion commercial paper, we have Zinafu 10 billion series 3 commercial paper, we have DLM Group 5 billion series 1 commercial paper, you have AB Microfinance Bank 3 billion series 4 commercial paper, you have the Dangote Cement 50 billion series 17 and 18 commercial paper, you have the CNI leasing 10 billion. So you see these are different companies coming to the market to raise funds. These are different companies, so there'll always be offers every now and then on CP. Like I said, last week we just concluded Access Bank, and I think as I'm doing this recording right now, there is FSDH, there's one ongoing right now. So CPs are always available at least once or twice in a month, and that also depends on the interest rate conditions in the market. So CPs are short-term instrument that you can invest in. Remember, they are unsecured. Unsecured means that there's risk, because what if the company is not able to pay the CP. But so far, so good in Nigeria. We've not had any cases where a company defaults. But then that doesn't mean that we're not going to be carrying out our due diligence. So I'm going to show you the few due diligence to carry out whenever you want to invest in CP, just for you to be safe. Don't always jump on every CP thinking that, oh, it's safe, it's safe. Yes, your broker, the issuing houses would have done their checks because they don't want to lose confidence. They don't want to sell CP to investors, and at the end of the day, the company is not able to pay back. So I'm sure they would have done their due diligence. They would have carried out advisory roles. They would have advised the company on a suitable interest, when to issue the CP, as well as whether it's fair for them to issue a CP at that moment based on their current financial position. So now, interest on commercial paper. The interest rate on CP payable, because the interest rate payable on CP are tied to CBN monetary policy rates. So if you want to look at the amounts or the interest on CPs, they are mostly tied or benchmarked against CBN monetary policy rate. So if CBN is increasing interest rates, it's likely that interest on CP will also be high, because you do not want to invest in CP at a low rate when CBN rate is quite high. So the CBN interest rate has always been a benchmark rate for other rates in the market, so including commercial paper. But if you look at the most time, CP rates are mostly higher than treasury bill and fixed deposits. So this is where CP becomes a lot more attractive. The interests are mostly higher than the treasury bill rate and fixed deposit rate. So if you're looking to invest in treasury bill and fixed deposit, you might probably want to consider CP because interest is higher. Now, the simple reason interest is higher on CP is because, number one, they are unsecured. There are kind of risk tied to it. But like I said, no company has defaulted so far. So, but I will show you how to check for good CPs, how to carry out due diligence so that you don't just rush into the market and be buying random CPs. If you look at it recently too, even Pencom is also taking into account um, such kind of due diligence. So you see that recently Pencom restricted most pension funds from investing in certain CP. So here, you see here, okay, you can see 27th of January is on business day, Pencom's new commercial paper rules. So you can see Pencom's new commercial paper rules may crowd out small businesses. So what are they saying here? The new commercial paper rule by National Pension Commission could crowd out small businesses, according to analysts. Pencom recently released additional requirement for pension fund administrator investing in commercial paper. So there are pension fund administration so most of the money that you save, you keep in your pension fund account. You see part of where it's going to commercial paper. So he said that the decision was taken to enhance risk management in the investment of pension funds. So like I told you before, even though nobody has be defaulted on CP, but you have to be careful. Due diligence is very, very important. So Pencom said PFAs can only invest in CP issued by corporate entities with a valid credit rating of A. Can you see here? Meaning they must have a valid credit rating of A. So there are rating firms like Augusta, Fitch and Fittings. So there are a lot of rating agencies in Nigeria that does corporate ratings. They rate them based on their credit risk, and then they will now assign either A rating, B rating, whatever, A plus, B plus, A minus, all this kind of stuff. So they only restricted PFAs from corporate entities below. So that means if your ratings are below A, then PFAs may not come for you. PFAs may not put their money just for them to ensure that pension funds are safe. The 20-year-old regulator also said that investment in CPs issued by corporate entities with a credit rating of BB may be considered if they are guaranteed by an agency backed by sovereign entity. Can you see here? So even if the rating is B, you can see they may consider if they are guaranteed by an agency backed by a sovereign entity, a multilateral development finance firm with a minimum credit rating of A, or a commercial bank with a minimum credit, you can see that. So even if the company is rated BB, as long as they are backed by one of these here, a multilateral development firm with a minimum of AA, or a commercial bank, that means commercial bank has to step in to back that company to say, don't worry, we are standing for them because we have been doing business with them. They are our customer, they are our clients. You understand? So you can do business with them just to ensure that pension funds are safe. Some analysts believe that this new requirement will further crowd out financing for small businesses who struggle with high interest. So any business that is struggling with high interest rates, maybe they are having issues with their bank, they are not able to pay back, or they have some kind of issues on their finances, is not straight, their credit score is very low, those kind of companies may find it difficult raising funds via commercial paper, especially when they are looking for huge amount that individuals or retail investors may not be able to provide. So those are some of the things you might need to read later on in the market. The idea is just to let you know that CPs are short-term debt instrument issued by corporation, typically to finance short-term liability. So you can read up this. In 2024, Nigerian companies faced funding squeeze as investors flocked to higher yield government debt instruments. Now, another disadvantage of CP sometimes is that when CBN interest rate is very, very high, whatever amount you raise from your CP as a company will definitely be part of your finance costs, part of your debt, short-term debt. Now, if interest rate is very, very high, then you might have to consider the option of raising CP, because I'm looking at it from the point of a business now. Because at the end of the day, you're going to pay high. Your finance cost is going to be a lot more higher. Why? Because CP is pegged to CBN benchmark rate. CP is commercial paper. Do you understand? So for some of us, I'll be asking, what is CP? It's commercial paper. So like I said, there's no specific yield, but you can use the direction of fixed income market to understand CP offer. So when you look at the fixed income market, the direction of fixed income market will guide you on how or what's coming up in the CP offer. For instance, recently, interest in fixed income asset has been coming down, has been going down lately from a peak of 29% down to 27, down to 20, blah, blah, blah. So it means any company that is coming to the market will most likely be coming with a lower rate compared to companies that issued CP last year. Last year, rate was very high towards the end of last year. So compared to now. So CP most times are tied to interest rate, but the interest currently is still, for me, still not bad compared to treasury bill. And for someone who is looking to compound their return regularly, CP is one of them. Is a low risk asset that you can tie your funds or your idle funds. So as of this update, MPC rate is around 27%. It means CP ranges from 27 to 30%. So the yield on CP right now is between 27 to 30%, depending on the rating. Sometimes the interest on CP also depends on the rating. For companies that has BB rating, they're going to be paying more as interest compared to companies that has A rating. So all this depends on the credit agency and the rating agencies in the market. So just understand this part of CP. So don't let anybody sway you into investing in TP without understanding, without a proper understanding, without accurate knowledge of what commercial paper is and the risk involved. Like I said, no company has defaulted. A lot of issuing agencies, stockbrokers are doing a good job to make sure that companies don't just raise CP and they find it difficult to pay back. But so far, it's still good for us to carry out our due diligence. Now, the due diligence on CP for me is why, like I said, why we have not seen a record of defaults of CPs recently. It is important for you to do your due diligence as stores. Number one, carry out liquidity check on that company. Especially look at the current ratio of that company. Liquidity check for me means I want to look at ability of that company to cover its short-term obligations without borrowing more money. So does this company have a good current ratio? Current ratio here looks like current asset to current liability. So here it reveals the motives behind the CP. Don't be swayed by the whole English they speak on that brochure. Look at the financial of the company. This is some of the things I'll be teaching in my ETC course for June, because we are expanding it. I'll show them how to run a check on the company financials and how to see the motive behind their CP. Because at the end of the day, if the company has a liquidity problem, meaning that they are carrying more current liabilities compared to current assets, you have to check the operating problem. So if they have a liquidity problem, then it means the company is using CP to pay back debts. So some of them will say, oh, we are using it to finance working capital. Well, I don't know if they are sincere or not, but if I notice a liquidity problem, most likely that CP is going to be used to clear a short-term debt that is expiring. In ETC section, I'll be showing them examples. So just to let you know the due diligence you should carry out when you are investing, understand the motive, know why. Now, it doesn't mean that when a company has liquidity problem, it cannot pay back. Sure, it can pay back, especially when it's an A-rated company. But when you know the motive, it gives you that there's this kind of peace you have, there's this kind of understanding you have that helps you know, especially knowing how much to invest in that CP. You understand? For a company that is investing in CP to finance maybe a short-term project or finance working capital, and they have a good liquidity position, your confidence level is high. The amount you invest is also high. For a company that has liquidity problem, the money you invest will be low. So that's the essence of investing in carrying out this due diligence to know if you should invest a significant amount of money in that company or not, because not all CP are the same. Now, if the company has liquidity problem, what should you do? You also need to check the operating profit against the interest expenses or finance costs. Is the company generating enough profits from operation to cover up the interest? That's like interest cover. So I prefer an operating profit to be at least 1 to 5, 1.5%, 1.5x. That means it has to be at least cover up that interest expenses or finance costs by 1.5. That also means that yes, the company is generating enough money. So in this kind of company, we are looking for confidence. We are looking to increase our confidence level. We are looking to check the extent to which we should be investing in that CP. So if you are looking at, let's say you have 10M to invest in a CP, for instance, maybe your capital is higher than the 10M I mentioned here, and you want to allocate 10M to CP. Now, 10M is huge for you to just throw it out around random companies. You have to go for stability. You have to invest in a company. Like one of the best CP so far in the market was Okomu Oil. Okomu Oil. I will show you that later on. Okomu Oil CP. Okay, it's not here. Okomu Oil CP was one of the best. Presco CP was one of the best. Why? Because these companies have very strong liquidity position. They don't have any issue. So why are they using CP? Maybe they want to finance working capital, fine. Or maybe they want to finance short-term projects. But their problem is not money because they have enough current assets to cover up that maturity or maturing liability on their book. So these are the things you check. So if none of this is in place, then the company is on a lifeline. Now, like I said, if it's on a lifeline, it doesn't mean that they will not pay back. Definitely, they will pay back because number one, by law, you're supposed to settle your creditors before you pay your shareholders. Number one. Number two, if they cannot pay back, then you have to sell your assets. So maybe the last thing you have to check is to value the asset of that company. You value the asset of that company and then make sure that the company has asset that is far more than the interest expenses and their debt, so that at the end of the day you'll be able to get your return back. So if you look at the company assets, that means total assets against their liability. So if total assets is far less than their liability, in short, don't even invest in that CP. Be very careful, be very careful. Yes, your broker will advise you at the end of the day. Now, like I said, we've not had any record, but it doesn't mean that your due diligence should be ignored. Please, this is very important. I'm taking my time to share this just for you to be aware that even in CP, while the rates are high, due diligence is very, very important. Like I said, no record of default, and that is good. Our brokers and our issuing houses and our regulatory agencies are doing a very good job on that. So that is my due diligence on CP. Now, the essence of this exercise is to know to what extent should I invest in this company or not. If I have two CPs on offer and one has good ratings, one has good financials, good liquidity position, the interest cover is very okay, total asset is far more, then I will most likely invest more because my confidence level will be very high. Now, the other one that is lesser, now it doesn't mean I will not invest in it because I'm sure the regulatory agencies, issuing houses would have carried out a check and then ask the company how they plan to pay back in case of default, whatever. But still, my level of investing will be a little bit reduced. So all this due diligence for me is to determine how much and to what extent I'm going to be investing in that CP. Now, how to invest in CP? You can invest in CP via your stockbroker, mutual fund, asset manager. Most brokers usually send email notifying their clients on latest commercial paper. Like for instance, you can see here, this is the emails I receive from the investment houses that I work with, so that I invest with. You can see from Meristem to IPO Capital and all that. So these are CPs in the market. You can see from here, we have Micure CP, we have VFD CPs, we have Robust International CPs, we have Dangote Sugar Refinery CPs, we have Skymark, we have Capital Technologies, Capital Sage, we have High Crest, we have C&I Leasing. So you can see these are different CP. They always send emails. They always send notification that, oh, we now have a CP. But in case you want to follow CP latest CP offers in the market, and then you have questions, maybe you want to ask questions, oh, on how to get started, okay, how to calculate your interest, which of them is okay, maybe there are multiple CPs in the market, and then you're looking for the best CP to invest in, and you need a guide, you can join our Glofolio forum. We have a new forum right now. It's called ask.glofolio.com. So now I created this forum specifically for beginners, so he to offer help. So if you want help on CP, now this forum covers Nigerian stocks, US stocks, and money markets. Now, but I'm sharing this because this video is on CP. So if you need help on how to invest in CP, or you want someone to guide you on how to invest and receive upfront interest. Some of you don't know that you can actually receive your interest upfront on CP, just the way you receive your interest on Treasury bill. You can actually receive your interest too on CP. You can go to ask.glofolio.com. This is ask.glofolio.com. I have created this forum for beginners who are looking for expert guide. And also, if you're an expert and you think you can offer help and assistance and guide people on how to invest in the market, how to ensure that they are not cheated. Yes, because one thing I noticed in that CP, I see a lot of wrong calculations. Wrong calculations. I remember sometimes I've helped few members to recover their their shortfalls from their broker. They invested in CP, their broker paid less than what is expected. We sat down, we carried out our calculation, and they were able to get that difference back. And some of you don't know. Some of you will receive interest from your broker. You don't know whether they are paying you the exact amount or not. Your own is just to invest and collect upfront interest. Please try as much as possible to know the exact amount ahead of time. So on Glofolio Ask, you can come here, you can ask questions. So you can see we are building a community of beginners who wants to learn. So if this is the first time you're joining, this is the first time you're watching my YouTube channel, and then you need a guide on how to invest in the market, you can come to ask.glofolio.com. Before you join our premium community, this is where I will answer all your questions from Nigerian stocks, US stocks to money market. So go to ask.glofolio.com. So on CP2, any investment on CP, you can as well go there. Like there's the recent CP right now. This is it here. Now open. FSDA Merchant Bank Series 1 and 2 commercial paper. So you can see details of that CP. 90 days, the yield on 90 days is 22, while that of 151 days is 22.7. And then the discount is 20.8, and the discount here is 20.7. So the discount here is what you're going to receive as upfront interest. Then it's the other. So let's say you are investing 10 million naira, 20.8 is counted on it to give you an average of 8 point something. So that means you're going to be investing 8 point something. Now the interest you collect divided by that 8 point something, that's where you have your implied yield. So you can ask questions. Assuming you want to invest in this right now, you can ask questions, and then I'll get to give you feedbacks and respond. This is where I want to be active. This is where I want to take all your questions so that it will be easier for others who are joining the market for the first time to refer to similar questions, because I see people asking the same question every now and then. So when you go to ask.glofolio.com, you are able to see questions people have asked on investing in Nigerian stocks, US stocks, and money markets. And if there are questions that you think are yet to be answered, you can as well post it there. Registering on this platform is very easy. Just go to sign up. You can see here, just go to sign up right here, and then fill your information, verify. That's all. It's as simple as that. Registering on Glofolio Ask is very, very seamless. So go to Glofolio Ask or ask.glofolio.com to register and start asking all the questions. So you want to ask me questions, or you have burning issues as regards investing, right here you have Glofolio Ask. So this is open to everybody and it's 100% free. So let's go back to our slide. Now, the second investment you should be looking at is Eurobond. Eurobond. So let's say you have 10 million. Now, the first thing you should do is to invest 5 million in commercial paper. We've talked about that before. Now, the second thing you should do is to take like 2M. and invest in Eurobond or USD fixed deposits. Eurobond are debt instruments issued in countries in currencies outside the issuer's home currency. In Nigeria, we have the federal government Eurobond, a US denominated long-term debt instrument that pays annual interest. Personally, I am very strategic in Eurobond investments. I only invest in Eurobond. I buy more Eurobond when USD exchange rate is down to a critical level that presents huge long-term capital appreciation. This is strategic for me. Whenever I want to invest in Eurobond, I do that more when exchange rate is down. So don't just jump into buy Eurobonds anytime. Do it more when you see that dollar to naira is down. Because at the end of the day, the long-term trend is still there. We Nigerians don't have the fundamentals to sustain any strength you're seeing currently. It's just a pullback, short-term pullback. Maybe CBN has one unusual inflow, which is not regular, to quickly defend. And if you look at it, anytime they defend the naira and they run out of firepower or cash or USD to continue to supply to the market, what happened? The increase is always more than the previous peak. If you go back to USD NGN chart. So this is the exchange rate trend in the market right now. So you can see from September, November last year, we've seen exchange rate dip from 1,006 down to 1,004. It is at this bottom that I always like to invest in commercial paper. You know, there are two things you enjoy when you invest in Eurobond. Eurobond. Number one, when you buy this USD at the low rates, you are going to profit from capital appreciation in the future. Because one, this is not the first time we're recording a dip. There have been multiple. Look at it here. We had a dip here. That was in April. Between March to April, dollar dipped to as low as almost 1,001. People were scared. They were selling. Invest in commercial paper. Sorry, invest in euro bonds. So imagine that you invested in euro bond when rate was down to 1.4. What would have happened when it's now at 1.5? Now that it's down, it's time to. So we have recorded. Let's see, we had one here. Tip is normal in markets. So the best time to invest in commercial paper is when exchange rate is down. Make it strategic. Now, if you cannot invest in euro bonds, I don't know why I keep saying commercial paper, euro bonds. If you cannot invest in euro bonds, you can actually do USD fixed deposits. A closer one is USD, and I like the bamboo fixed deposits. A closer investment is the bamboo fixed deposits. If you know the bamboo app that I used to trade US stock, they have a fixed deposit, USD. They pay an average of 8% per annum of maturity. So if you buy USD when it is low, at maybe like current price at 1,004, 1,005, and then you leave it for the next 12 months, run over again, you see that at the end of 5 years, you see what you are. Because over time, the USD to Naira will always appreciate. So invest in Eurobond when the USD is down. I'm sharing a secret with you right now. That's the best time to invest in Eurobond. So that one, you're going to be earning 8% interest. One. Now, the money may not come in from that interest angle. Where I am banking on more is exchange rate gain. Because you bought your Eurobond or you invested in fixed deposits at the bottom of exchange rate. What happened? By the time rate picks up again, and it matures, you're likely going to be selling when rate is high, meaning you're going to make money from interest rates as well as exchange rate differences. So whenever you want to invest in euro bond or fixed deposit, do it when rates are high. So this is a safe, secure. I'm talking about the fixed deposit now. This is a safe, secure, and registered investment. You can put some cash in when USD exchange rate is low. Look at it here. This is a key point. So that means you don't invest in euro bond randomly. You don't wake up overnight or you don't wake up in the morning and say, oh, I want to buy euro bond. No, do it strategically. Do it when exchange rate is low. I bet you will see the return. It's massive. Because when let's assume you rush to buy euro bond when dollar was 1,600. Now, by the time the Eurobond matures, you understand, or at the end of the year, you decide to liquidate your Eurobond, you will see that the Naira equivalent might be small because of exchange rates. So do it when rates are low and when you think rates are high. And I teach all this. I'll be teaching all this in my next ETC section. ETC has been improved. I've added a lot of things to ETC, and one of them is how to forecast forex rates in Nigeria. I'll be teaching them in the June batch how to predict forex rates in Nigeria. with level of accuracy. How do you look at exchange rate on charts? How do you know at what point should you be accumulating the USD? At what point should you look at it and say, okay, there will likely be crash, but this crash for me is not something that requires me to sell off. I'm ready to hold because Eurobond is a long-term investment. It's not a short-term investment. So as of this update, USD has moved to 1,530 after a double bottom chart pattern at key level. So if you look at it here, there is a double pattern formation on chart. I've shared it before with them on our monthly webinar. You can see here. And whenever there's a W pattern, double bottom at key level, it's a sign that exchange rates will be picking up very, very soon. So this is the best time to actually accumulate the USD. Accumulate the USD, put the money in fixed deposit on Bamboo, or put the money in Eurobond. So that when USD rises back to an average of 1.6, number one, you will have made money from exchange rate gain, exchange rate difference. So don't invest in Eurobond blindly. Do it when rates are down. I'll be teaching all this in our ETC section. So first investment, commercial paper, you put your 5 million naira there. Now, remember, you're going to collect your interest on commercial paper. Hold it. Don't spend it. The mistake a lot of people make again is when they collect their interest on commercial paper or treasury bill, they just spend it. No. See it as a seed that you should plant. Second investment, which is 2 million naira, is Eurobond. So let me do the allocation. 2M right here on Eurobond. Remember, you are investing in Eurobond when exchange rate is low. And then the first one, commercial paper, you're doing what? You're doing 5M. So you can see the allocation. You can see how I'm doing strategic allocation of that. You can see why that 10M is fair. If you do 5M, you won't be able to invest in this. So that 10M is the minimum you need to get started in this investment mix that I'm sharing with you right now. So if you do 2 million on Eurobond, so 2 million at current rate of 1,534. So 2, 1, 2, 3, 1, 2, 3, 1,534. So that is like 1,300 USD. So this 2 million should give you an average of 1,300 USD. So this, you are going to invest in Eurobond. Now, another thing again is a lot of broker requires minimum of 2,000 USD when you want to invest in Eurobond. Some will say 2,000 USD, some will say 325. So if this minimum cannot get you Eurobond, just move the money to fixed deposit immediately. Just move it to fixed deposit immediately. So let me go back here. This is what I'm supposed to put. That's investments. So 2 million in Eurobond or US fixed deposit. So if this 2 million, which is 1,300, cannot get you Eurobond because of the minimum amount required to invest, because I know a lot of all these investment house, they'll tell you 2,000 USD, 2.5, move the money to Bamboo fixed deposit account. It's still the same interest, 8%. 8% interest. So whichever one. But like I said, what is more important is you accumulate the USD at the bottom of the market. So if this rate moves from 1,005 back to 1,600, 1,670 or 1,650, so 1,300 times 1,650. So you can see your 2 million would have moved into 2.1. And then you watch. Remember, you're going to be holding it for a long time. By the time you multiply your interest earning on this amount too, you will see that at the end of the year, you would have recorded some level of growth on your portfolio. So remember, we are adopting a mix of low risk and high risk investments. Low risk and high risk. The low risk here is the commercial paper and Eurobond to preserve your capital. You can see, so averagely, we have invested 8 million naira now, 5 million on Eurobond, sorry, 5 million on commercial paper, and 2 million, 7 million, sorry, 5 million on commercial paper and 2 million on Eurobond. So what happens to the third investment, which is the 3 million? It is where you're not going to put 3 million plus your upfront interest. Your upfront interest on commercial paper, and that is what? G30 stocks. G30 stocks. So on these G30 stocks, we're going to be investing 3M from that 10M, which means 3 plus 2 plus 5, that's 10, plus the upfront from CP. This is a standard way to allocate capital and build a portfolio that would deliver minimum of 50% per annum. Now, if you invest the upfront, I've said here, invest the upfront and regular interest receipts of your commercial paper and Eurobonds in G30 stocks. Historically, G30 stocks have given me most return in the markets. Stability, G30 stocks. Liquidity, G30 stocks. And return, G30 stocks. G30 stocks are fundamentally sound, oversold. You see this oversold? That's where this bottom pot is coming in. I've discussed the secrets to making it in the Nigerian stock market. And one secret is focus on bottom pot stocks. Focus on stocks that are down. There are many reasons people sell a stock, and there's only one reason they buy a stock. I've said that before in my videos. They only buy a stock because they think it will go up. When they sell a stock, it's not because it's going down. Sometimes you may need cash. So you want to focus on those stocks that have been sold off because the investors need cash, because they sold out of fear, or because they want to divest, not because the company has bad financials. These are the G30 stocks. These are the fundamentally sound, oversold heavyweight stocks, highly liquid in the Nigerian stock market with good upside potential of 50 to 100% in the market. Example of G30 stocks I've recommended so far, but their prices are already high. Okomu, Presco, and Dangote Cements. So when you invest the 3M in Okomu, when I recommended Okomu in the markets, for those that joined us last year, I think I dropped Okomu. I recommended Okomu at a key level. Let me go back to, yes, I think we keyed in Okomu around 300, 350 or thereabouts in December last year. So from 335 to almost 500, calculate the return, and we are still holding. When you invest in stocks like Presco from 400 to over 750, Presco is up by 550%. 50% when I initially recommended the stock, 50%. Remember, I will buy them on after dip. You can see the dip here. There must have been a dip before you enter bottom pot stock. So imagine buying solid companies. Solid companies. As I'm doing this video recording today, I am planning to buy NASCON when market opens on Wednesday. Although I have entered NASCON, but I want to average up. NASCON is an example of a stock I am buying. We've entered NASCON already in our Globfolio community. Now I'm planning to average up. Average up means I don't mind buying them at the current price because my total cost will still be low. But if this is the first time you're buying NASCON, the price will most likely be high. But if you have entered NASCON before, earlier on when I posted it on the Globfolio community, then your entry price should be low. So if you decide to buy again and top up, your average cost will still be low. That's the idea of average up. You don't just average up blindly. You average up and also pay attention to your costs. I see this stock as one strong stocks that you should buy with the interest you earn from your commercial paper and also part of that 10 million you're investing. So you can see how you're doing all this strategically. First one, out of your 10 million, you put 5 million in commercial paper. You can see that 50% of the money is in a safe asset. Now, the return you are earning from that, the return you are getting from that commercial paper, upfront interest, you are moving it to the stock market. 2 million out of the 10 million is going to Eurobond. And you only buy Eurobond, you only invest in fixed deposits when USD is low. It's a strategic. You don't buy it when it's high. You buy it when it's low so that you can take advantage of exchange rate gain as well as the annual interest. That's how you make money investing in USD assets. You do it when rates are low. Be greedy when others are fearful. Now that rates are low, people are fearful. People are asking, should I sell when it's available? This is the time to accumulate. Because by the time it's high and you start buying then, that's how people lose money. I can tell you, I'm very sure that some people have bought dollar at a higher rate. Some of you that are watching this video right now, you have invested in dollar, you have bought dollar at a higher rate. Now you are thinking whether you should sell or not. I know they say, let me even hold on. So don't always buy USD at the top of the market. The same thing you used to, I share and I teach you in the stock market. Buy your USD at the bottom of the market. Buy your USD at the bottom of the market. Something is happening right now in Nigerian stock markets. Now, for those that are in my community, I've been sharing updates back to back. I've been sharing updates back to back. Now, if you also watch my previous videos, I also talked about it. So you notice how the market had probably pulled back from a high of 109,850 basis points. That was in February. In the whole of March, the market was down. Now, note something, how the market respected this key level right here, which is also 50% Fibonacci retracement from this low to this high. So that means we'll most likely see the market pick up again. So this week is going to be critical for me in the stock market. And I'll share the exact points that we're going to say the market is back to a bull. Don't rush into buy. You need to, you see, accurate knowledge is very important when it comes to investing. I've told them, before they see this rally here, I showed them, we saw it. Before this rally here, we saw it, how I was watching this key level, how the market broke out on this key level, how I told them, even if you have your treasury bill or any fixed income that is expiring in December, move it to stock market. I showed them when the index was around 99,000 basis points. Look at where the index went to and then pull back. Now I'm telling them where to watch. I've already marked my region. The moment I see the index, give me that exact, this is what we call buy trigger, entry trigger. What condition do you want the market to fulfill before you can enter? We call it CEST model: condition, entry, stop loss, and take profit. This is the ASI, all share index. And remember, a significant portion of your stock price movement is tied to the overall market. If you own a good stock or a bad stock, if the market is going down, all the stocks are going down. So it is good to buy stock when the index is about to rise. That's the best time to buy stock, because as the market is going up, everything is going to, so the market is going to support the uptrend move. So if I have a good stock to buy and I see that we are in a bearish market, I would be very cautious. But when I see that we are moving into a bull market, look at the way stock prices always go up whenever the index is picking up. You see, so I have told them already. So if you are here to join our community, this is the best time to join our community so that you can get updates on when to buy. You don't jump into Nigerian stocks randomly. A lot of people have entered Nigerian stock when the index was 109,000 basis points. And now they are discouraged. Their shares are down. They don't know whether to sell, or maybe in short, the craziest thing is some of them are even saying we are in a bear market. Do you know what a bear market is? You don't tag a bear market by looking at 1 month pullback. No, you look at what we call market structure. In the financial markets, we look at it is market structure that tells you whether you are in a bull market or bear market. In a bull market, it's characterized by what we call higher high, higher low. As long as the recent low is higher than the previous low, we are in a bull market. As long as the recent high is higher than previous high, we are in a bull market. It is only when the market drops below the previous low, that's where we have what we call change of market structure, change of structure, meaning we are moving most likely from a bull market to a bear market. You look at markets, it is not what happens every day that determines whether we're in a bear market, or else you'll be confused. If the market goes up today, you say we're in a bull market. Tomorrow, if it comes down, you say we're in a... No. Know how to arrest your emotion in the stock markets. So here, I've already showed them what to watch out for. Now, once this index clears that, one of the stocks I mentioned is NASCON. Now, I am buying NASCON because my average cost will still be low if I key into that stock. This company had been beaten down. Look at it here. This stock has been beaten down. Look at how this stock is picking up, recovering. Look at the Q4 result of the company. Q4 result. I showed them the Q4 result. It was very impressive. When you're analyzing a stock, I don't look at 12 months. I look at the recent quarter, because if there's going to be a change or turnaround, it's going to start from recent quarter. So imagine finding stocks like this, and some of the ones I'm going to be showing them in the community, and you invest in those stocks with the 3M from your 10 million, upfront interest from commercial paper. At the end of 12 months, you will see what will happen in your portfolio. You build a profitable investment portfolio when you follow this model, when you combine low risk and high risk, the low risk is helping you to preserve your capital. The high risk is helping you to grow the return. So if by the end of 12 months, or by the expiration of your CP, maybe like in 9 months, 270 days is like 9 months. In 9 months' time, by the time some of these stocks rally higher, just do you will see this is a working model. This is a working model. This is how to confidently beat inflation in Nigeria and sleep well. Buy CP, invest in Eurobond, and then hold G30 stocks, liquid stocks in the markets. This is how to invest your 10 million naira in Nigeria. So if you have 10M and are looking to allocate it properly in such a way that in 12 months, your 10 million would have grown by an average of 50% in next 12 months. And then you can repeat that same process again for the next year. Do that for the next 5 years. You will see what will happen. This model that I've shared will help you do that. If this is the first time you are watching my video or you're coming to my channel, kindly hit the subscription button and turn on the notification bell so that when I release interesting videos like this, you'll be among the first to get notified. Now, if you're looking to join our community, go to glowfollow.com/subscribe. If you want to catch the hottest stocks I'm buying right now, the hottest stocks that I'm putting my money in right now, I share all that on glowfollow.com. When you join, now, a lot of people always have issues chatting my support. Whenever you subscribe to Glowfollow, there is a number. There is a number. If you go to glowfollow.com, there is always a number to chat. There is always a number to chat. Like when you come to Glowfollow here and you go to subscribe, see, glowfollow.com/subscribe, select a plan. Now, when you click on the plan, let's say you want to join the basic plan, you click the basic plan, there is a number to chat. It's on the screen here. So I know a lot of you have paid for subscription, but you're here to be added to our WhatsApp group. Kindly chat this number. They will confirm your subscription, and then if you want to do transfer, fine. Confirm your subscription and add you to our WhatsApp group. You need to join our WhatsApp group. It's very important. That's where you get most value from. Yes, you'll be logging in from time to time to see recommendation, but market update, continuous update. I share regular updates on the state of the market, and I do that in our WhatsApp community. So please make sure you chat our support so that they can add you to the community. Thank you.